You know what's wrong with most support and resistance indicators? They draw lines everywhere, and by the time you figure out which ones actually matter, you've already missed the move, or worse, taken a fake breakout that stops you out. And that's exactly why you need to see this indicator everyone is talking about. This powerful tool doesn't just guess where support and resistance might be, it also demands proof from the market before drawing a single level, multiple fractal confirmations within a volatility-adjusted zone. And in this video, I'm going to reveal this powerful indicator to you, show you exactly how its fractal clustering logic works, and give you a complete strategy with precise, long and short setups you can start using today. To add this powerful indicator to your chart, first, head over to TradingView and pull up any chart you want. I'm using the 15-minute time frame on GBPJPY, but this works on any market, any time frame. Click on Indicators and type in Fractal Support and Resistance. Make sure you select the one by Big Beluga. Now, this isn't your regular support and resistance tool. No, this is much better. Most indicators just draw horizontal lines at swing points and call it a day. But this one, it uses fractal clustering logic to identify only the zones where price has actually turned around multiple times within a tight ATR-scaled window. Let me show you what makes it special. You've got these shaded zones. Green for support, built from clustered low fractals, and orange for resistance, built from clustered high fractals. But here's where it gets interesting. See these numbers stamped near some zones, like 3 or 4? That's your validation count. It shows how many same-side fractals fired close together to earn that zone a spot on the chart. It's basically the proof label, so that at a glance, you know whether a level formed from a couple quick taps or from repeated hits that met the indicator's strict rules. And those tiny triangle markers you see along price? Those are the raw fractal prints. Inverted orange triangles above bars mark swing highs, while upright green triangles below bars mark swing lows. Watch how clusters of those triangles stack up at similar prices just before a zone appears. That's the breadcrumb trail the indicator uses to promote an area from interesting to validated. Now here's the truth. Most retail traders never figure out. You can learn every manipulation setup I just showed you, but if you're manually staring at charts, you'll always be the last one in and the first one out. That's exactly why we automate everything: entries, exits, and risk management. Our traders run these exact setups fully automated across forex, crypto, and indices, and the results speak for themselves. Like Ethan, who got funded 3 different times using these systems, or Marion, who made $10,000 in just 10 days while still working full-time as a chef. These aren't what-ifs, they're real results happening inside our community every single day. If you want to see the live performance results and backtest data for yourself, click the first link in the description before the spots close. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Now, before I show you how to trade this special indicator, let's get your settings right. Double-click on the indicator to access the settings panel. You'll see the Fractals QTY setting, which controls how many fractal confirmations are required before a zone gets plotted. I found the default 3A spot for most markets, as it gives you reliable zones without waiting forever for validation. Next, you've got the Support Fractals QTY and Resistance Fractals QTY. These let you set different thresholds for longs versus shorts if you want. Under the type setting, you can choose between Average and Extreme. Average places the level near the center of gravity of the clustered fractals, balanced and forgiving. Extreme pins the line to the structural edge, lowest low for support and highest high for resistance. I recommend starting with Average for a cleaner read, but if you want maximum precision on the structural edge, switch to Extreme. Under the Style tab, keep the triangle markers enabled so you can see where each fractal printed, and make sure the boxes and lines are on for clean zone visualization. After that, click OK. Now let me show you exactly how to trade this. For long entries, first you need a validated green support zone beneath price. This zone should have a validation count of at least 3, meaning 3 or more low fractals clustered within the ATR scaled window. After the zone prints, wait for a gap develop. That just means several candles in a row where none of them tag the support, maybe 8 to 12 candles if we're being picky. This gap is critical because it shows price moved away from the zone, creating the setup for a high probability retest. Once there's that air pocket, wait for price to come back and touch the level with a wick only. It's a clean reaction. Because the fractal length is typically 5 bars, confirmation happens only after 5 bars complete. So let those 5 bars print and look back to see if the fractal marker gets stamped on the retest wick. Now when that marker is confirmed, that's your green light to go long on the next bar. Place your stop loss just below the support line or the bottom edge of the box if you're using extreme placement. For take profit, target 1.5 times your risk. For short entries, just mirror the logic. You need a validated orange resistance zone above price with a count of at least 3. Next, let price gap away for several untouched candles, then wait for it to come back and wick into the level without a body close through it. After 5 bars complete, check for the confirmed high fractal marker on the retest wick, and once you see it, take the short on the next bar. Then place your stop loss just above the resistance line or top edge of the box if you're using extreme, and target 1.5 times your risk. The beauty of this system is simple. You're trading zones the market has already defended multiple times, so you're not guessing. You're responding to proven structure with confirmation manipulation from fractal logic. Here's what separates profitable traders from everyone else watching this video. Retail keeps chasing breakouts and getting dumped on, while institutions pocket the profits. You can master every manipulation strategy I just showed you, but if you're trading manually, you'll burn out long before you ever get consistent results. That's why we built automated systems that hunt these manipulation moves 24/7. No emotions, no missed setups, just results. Over 600 traders are already using these exact systems, like Dan, who made $9,000 in his very first month, or Steven, who shows consistent overnight profits while he sleeps. But I only take on 30 traders each month because I personally guide everyone through setup to make sure you're getting results. So if you're serious about finally trading with the institutions instead of against them, click the first link now before spots fill up. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. But these strategies only work their best when you've got the perfect settings for your market. For forex pairs, keep fractals Q to Y at 3 and type set to average. Forex markets have consistent fractal patterns, and these settings filter out session noise while catching real institutional moves. Also, focus on major pairs like EUR-USD and GBP-USD during London and New York sessions when fractal validation is most reliable. For crypto, drop fractals Q to Y to 2 for faster zone formation. Crypto moves explosively, so you need quicker validation to catch those rapid reversals. Set type to extreme to get precise entries at structural edges, as crypto respects exact swing points more than center of mass zones. For stocks, bump fractals Q to Y to 4 for stricter validation. Stocks trend more consistently, so you can afford to wait for stronger confirmation without missing moves. Keep type at average, as stocks often respect the middle of clustered zones rather than extremes. For gold, use fractals Q to Y at 3. Gold has violent swings with precise turning points, so the structural edge placement catches those explosive reversals better than averaged levels. Thanks for watching, and I'll see you in the next one.